What's up, everybody? Michael and Coco here to do some technical analysis on the S&P 500. If it's your first time here, welcome to my channel. I do these videos Monday through Friday, 5 days a week, and on Saturdays I do my weekly scan, which is walking you through my watch list of stocks, and then every once in a while I sprinkle in a quick tip in there as well. Let's go ahead and hop into today's video. Welcome back. We are going to be going over the daily time frame and the 30-minute time frame. Today's video is going to be short and to the point, really just because there wasn't too much price action today. If it's your first time watching my videos, this upper rectangle right here, this red box, is just an area of resistance that we call the bear's camp. Below that is the green rectangle known as the bull's camp, which is an area of support. Not much going on with the price action today. It looks like it's struggling between finding where it wants to go. Some upwards action, some downwards action, kind of create an indecision candle. Overall, the price action does look like it kind of wants to roll over a little bit. So it kind of went up and then came down and then it made a lower high. It looks like it wants to come back down to the bull's camp and test that level. I would say 3,000 would be the range that it wants to test. As you can see, 3,000 is right by that 200 period moving average. And then you have the blue line here, which is the 50 period moving average. So there's a lot of support within this area. I don't think that the market's gonna fully just rock down and fall over. I don't think that the Federal Reserve would allow that. Markets typically will collapse more when there's less liquidity. But, you know, there's plenty of liquidity into the markets right now. Now, if I did want to think that the price was heading lower, I think it would have to close below the 3,000, close below this bull's camp. And then if it got really down to this level here, the 2780, and close below it, I would see that the market would potentially head lower from that point. Overall, though, the market looks like it's somewhat in bullish context simply because you can see it's been very consistent with the upwards movement, the pullback up, pullback up, pullback up, pullback up, pull back up, and then it looks like it might want to pull back here just a tad bit more, but we will see. I'm going to hop into the 30-minute time frame in just a second so we can really walk through the price action. As you can see, this move up right here was really, in my opinion, I think that was a short squeeze, and the reason why is because there was a lot of resistance in this area within that specific time frame. And I feel like just above this line is where a lot of stop losses were hanging out for the shorts. And when a short stop loss gets triggered, they have to cover and buy their position back. So what that does is it creates a lot of buying momentum, which drives the price up faster. So that's what, a short squeeze is. So it got this big, huge run up here. Created all sorts of euphoria in the markets, and then, man, this just was a gigantic drop right there. Big down day, so there's still a lot of volatility taking place in the markets, and it's kind of in that zone where there's a lot of volatility in previous history of the chart. You can see there's a lot here, and there was a lot here. Let's go ahead and hop into the 30-minute time frame just to kind of recap what we talked about as far as resistance and support goes yesterday, and then where I potentially might set up a trade in this type of environment. All right, so we are here at the 30-minute time frame. As you can see right here, this vertical blue line I'll draw in. That represents where the day started today, and then it has just been going sideways all today with a little bit of up movement, a little bit of down, a little bit of up, a little bit of down, and now it's moving up just a little bit. The two moving averages on the 30-minute time frame, the 200-day period moving average is slightly moving up, and then you have the blue moving up as well, which is the 50-day period moving average, not giving us all too much data. However, you could potentially say that this kind of pattern that's forming is somewhat of a bull pennant or bull flag. It's possible. I can see why people would think that. Now, these were the areas of resistance and support that I drew out yesterday. This top line right here was at 3150, let's call it now. I was mentioning that this could technically be lower because there is an area of resistance right here. So you can make it 3140, or all the way up to 31. I just said, let's just call it 3150 for rounding purposes. And then the main level of support that I'm keeping an eye on is 3180, which is right down here. As you can see, it acts as resistance here, act as resistance there, then support. Now, obviously, there's more levels within this channel, which we talked about previously, But the reason why I talked about these two levels is because if one is broken, I think that the next point that the market will be touching is the blue lines. So the blue lines is really what I'm kind of seeing as far as an opportunity to trade. So how would I play this? Well, if the price were to break below that green line, I think that the price would be coming down to retest this 3,000 range, and that would present itself a good risk versus reward opportunity for the long side. So say if you can pick up shares down here, have a tight stop loss just in case if you're stopped out, but it presents itself a good area for a potential nice bounce. Now, vice versa, if you were, a little bit more riskier trader and you understood how to do puts or short the market, if it does close below this line, you could potentially short the flush downwards. But I'm looking for high probability trades, and a higher probability to me would be a bounce from the 3,000 point because I just don't see that the market would want to go much lower than that. And then the second area that I would say would be a good opportunity is if we broke above this red resistance line. The next stop would be to close the gap here previously at this island reversal pattern. And an island reversal basically just is saying that, hey, it gapped up this day, went sideways for a couple of days, and then gapped way down, leaving these kind of island in the sky right here, these clouds in the sky. So I feel like if we were to break above this 3150, the next area to test would definitely be this 3190, and that 3190 would present itself a good opportunity potentially to short. And how I would play that is I would just have a tight stop loss right above that, behind that wall, and I'd enter in previous to it. So if the price came all the way up and then got rejected, I'd be able to capture in some high probability profits right there. Now that's just an opinion, and there's probably plenty ways you can trade this, because you could technically just trade a breakout of, say, for example, this resistance right here at 3140, and then you can just play the breakout up to 3190. That's an opportunity. Or you can play a breakout of the higher portion, the 3155 or 3150, which we called it, and then play the breakout up to the upside. Both you can do. It just depends on what your strategy is. And personally, with this type of market volatility, I'm just looking for high probability trades. And personally, what I think that might be would be, somewhat of a pullback down to the 3,000 and to enter in long, or potentially this window to be closed up here at 3190, and you could short from that point and just have a tight stop loss. So really, you're just managing your trade and minimizing the amount of risk. As far as this in channel that it's within, I just don't see any opportunities to really trade. I mean, there's plenty, if your strategy prefers it, but me personally, it's just like I don't care about this up and down chop. I want some sort of momentum in some sort of direction, and I think that we're going to get momentum when it hits one of these levels, either to the downside or to the upside. Now, for example, if it breaks 3,000 and starts heading lower, what's cool about being by these big levels of support, for example, the 3,000, say if I entered in, for example, right here, okay, the price comes all the way down, but then it breaks through. Now, I could just simply get out of the position by having a stop loss, or if you're a more advanced trader, you can reverse the position potentially. And if you reverse the position, that means you can start shorting from that close if it closes below. Now, I don't recommend that for people that aren't used to reversing orders or switching positions over like that, because sometimes if you get a breakdown below it, it could just be a false breakout or a breakdown. So you got to be very careful with that kind of stuff. But nothing's changed from really yesterday. As you can see, really nothing took place today. We had the jobs report data came out, no reaction to it whatsoever, just sideways price movement. So I guess we'll see here, what happens in the next few days of trading. That's all I have for you on today's technical analysis update. We will see you later. Goodbye.